Live with the mortgage calculator. Today we're going to be going over some live mortgage rates and then talking about asset utilization loans. We'll wait just a minute here to get started. Let us go live on all the different platforms. You can go ahead and check in and drop a comment there as you tune in. We put the chat up on the screen, so feel free to drop a comment there. I see some people who are already tuning in nice and early, so we appreciate that. Remember, we do this at 11 a.m. Eastern every weekday where we go through the live rates. This week has definitely been interesting. A lot of movement going on with the rates. So it'll be interesting to see what's going on today, like it has been all week. Great deep dive topic here today that we haven't talked about for a while. So that's going to be good to go over. Happy Friday, everyone. And we'll get started here in just a moment. Thank you for the comments coming in there. Appreciate it. All right. So it looks like we are live on all the different platforms, so we'll go ahead and get started. We're going to take the chat off the screen, but please keep dropping comments there as you tune in and drop any questions you have in there as well as we go through our deep dive topic here today. And welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do every morning on the show, every weekday at 11 a.m. Eastern, is go through the live mortgage rates, and then we do a deep dive into a different topic. Today's topic is going to be asset utilization loans, something we're very familiar with here at the Mortgage Calculator because we specialize in non-QM loans. So our sales manager, Jose, with 28 years of experience, is going to do a deep dive into asset utilization loans, I guess I should say, and there's a few different names for it. But we'll go ahead and do what we do first every morning, which is go through the live rates. So Nick, if you're ready, let's go ahead and pull up our pricing tool and see what the rates are looking like this morning.
All right, already see some updates going through my email there. Rates getting updated. Let's go ahead and check it out for ourselves. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today. It is Friday, December 15th. Lots of news going on this week. Lots of movement in the rates. We've seen a tremendous drop overall. And as the programs kind of stabilize, we've seen the non-QM end of things drop as well. If you'd like a full loan estimate that breaks down all the fees that go into the APR, please get with one of our team members. We have over 400 licensed loan officers in 24 states. So for today's demo, we'll set up a scenario we can compare across the programs. We'll set up $400,000 loan amount. We'll set an LTV of 80% loan, 20% down payment. And we'll set the price to search for the lowest rates we can offer for conforming conventional. And then we'll check out FHA. And then we'll pull up our expanded guidelines, also known as non-QM, where we have over 5,000 additional options, including the topic for today, which is our asset-based programs. We also have VA and USDA, but VA is only for active vets and eligible service members. If you are, just let us know. And USDA is only for properties that are eligible. So if you do happen to be looking for one of those, just let us know. We can quote those, no problem. We'll start with conforming conventional. We'll do a purchase, 30-year fixed, primary occupancy, single-family home, 1 unit, state of Florida, Miami-Dade. And for all the demos, we use a credit score of 760 and an estimated debt-to-income ratio. So with these settings, let's check out the conventional options. All right, a little bit better than it was yesterday on the show, but obviously we saw some of these rates come across yesterday afternoon as well. But we have a 6% rate for 2.5 discount points and cost, pretty amazing. Puts the APR at 6.287. Just about a month ago, we were up over closer to 8. So these are amazing changes that have been happening with the rates dropping like a rock. Definitely recommend all the customers out there that have been considering to get started shopping. If our customer doesn't qualify for conventional for any reason, typically the next option we want to present is an FHA option, which allows more leniency on credit issues, as well as a much higher debt-to-income ratio overall. However, for the demo, we'll keep everything exactly the same so we can compare apples to apples here across the programs. So best option here, 5.375 rate, 2.375 discount points in cost, puts the final APR at 6.299. That's almost identical to conventional there, so not much difference today. But our customers might want to look at both programs if you qualify for both, and the customers that need to use FHA, definitely some cool changes to the MI that is included in the APR here. There's an upfront mortgage insurance and a yearly mortgage insurance. Now, if for any reason our customer does not qualify for either FHA or conventional, unfortunately, many other banks or lenders would have to deny that customer. But that's where we love to present our expanded guideline options. Again, the topic for today is our asset options, but we have a ton of different options here. So when we select our expanded guidelines non-QM, we can change the income type. Full doc is what we use for conventional and FHA. So if our customer doesn't qualify using full documentation, aka 2 years of tax returns, that's typically when we'll choose a different option, such as our asset related options, which Jose is going to go over today. We have business bank statement options. The investment options are just for investment properties, so we'll do those in a minute. We have our personal bank statement 12-month, which is what we use for the demo, which is the most popular. We have RSU, stated income, VOE, 1099, P&L, and no income CDFI options. Most popular here is the 12-month bank statement, and that's for our self-employed borrowers. So let's check out the options here for bank statements. All right, and we're seeing downward movement as expected with non-QM. Takes a couple days to respond here. All these programs were up over 8 APR just the other day. Now we have a ton of options under 8. Best option at the top, 7.25 rate for 2.5 discount points and cost. Puts a final APR at 7.678. So a great option there. It is higher than conventional, obviously, because we're using 12 months of bank statements rather than 2 years of tax returns. But for our borrowers that must use these options, this allows them to get the home that they really want. And if we scroll down here, there's a ton of different options. Some of these at a little bit higher rates and costs may allow bankruptcies, foreclosures, other credit issues, and may allow different ways to calculate the income. So please get with our team. There's hundreds of variations here. Find the best one that works for you. And before we go into Jose's example on another type of non-QM program, we always want to do our investor demos. So we'll set up the same scenario here, 400,000 loan amount, 80% loan to value, 20% down payment. And we're going to ask the computer to find the lowest rates we can offer for conforming conventional and compare that with our expanded guidelines, also known as non-QM. Government programs, FHA, VA, and USDA do not work for investments, so we'll skip over those here. We will start with conforming conventional. Everything is going to stay the same as our other demos. All we've done here is change to investment. So let's check out the investment conventional programs. And drop in like a rock as well. So we love having episodes where the rates are dropping. So best option here, 6.624, 3.375 discount points, puts the final APR at 7.018. Definitely was much higher before and was really unfeasible. Now these are good options for our customers that qualify. Full doc definitely would consider conventional. However, I definitely recommend all of our customers out there looking for investments, check out the non-QM options as well, which will be our final demo here, because there's a lot of flexibility that comes with these programs. So when we select expanded guidelines, also known as non-QM for investments, we have a couple new options pop up. First is our income type. The most popular income option for investment properties and our most popular loan is our DSCR loan. That stands for debt service coverage ratio. And that's because it doesn't require any income or employment from our borrower or documentation on that. Simply use the estimated rental income to determine the DSCR value. If the estimated rents can cover the expenses, the PITIA of the mortgage, aka the property cash flows, that's a ratio of 1. If the property does not cash flow on a monthly basis, that's a ratio under 1. We still have options for that. For the demo, we put 1.5 so that we can see all the programs pop up. And finally, a prepayment penalty is standard here. 3 years is what we use for the demo. We can always select 0, which will limit the programs that show up and cost much more. And we can also select 5 years, which will also limit the programs but does cost less. 3 years is standard, so that's what we use here, so we can see all the common scenarios. So let's check out the DSCR options. Wow, absolutely smoking. So 7% rate for 3.375 discount points and cost puts the final APR at 7.513. So even though the conventional is reasonable now at just over 7, a DSCR loan for just about 0.4 higher than conventional is absolutely amazing. I would say I would recommend 99 to 100% of investors would take advantage of this program, opposed to a conventional program. For the ease, flexibility, you can do 1, 2, 5, 10 loans at a time, refinance multiple properties, purchase multiple properties, no income or employment documentation. So most investors, even for the slightly higher 0.4 in cost there, would choose this program. Now, there's a ton of options at higher rates and costs as well. Some of these may allow bankruptcies and foreclosures. Some may allow short-term rental income. Some may allow different property types that we've gone over in our demos. So please get with our team to find the best options. And now let me switch my screen again, and we will get into Jose's topic for today, which is one of the income types under expanded guidelines, also known as non-QM. You always see me skip over that in the demos. It is a little bit complicated. Bank statements is a pretty standard option. That's why we keep with that for the demos, and that way we can do it every single day and do it over and over. Asset utilization is obviously one of those buttons there that you saw, one of the types, but once you open up those programs, they all act a little bit differently. So Jose has a couple specific examples here. Asset utilization, there's many ways to put it. Asset depletion, asset utilization, different ways to calculate it. Every program does it differently, has different factors. So Jose, I guess I'll let you present it, and you can talk about the specific ones you use, because there's dozens, if not hundreds, of variations here of ways we could do these types of programs. So it's a little bit complicated. But if you're ready, let's check out some demos. There you go.
Good morning, everybody. Thank you for joining us, Daily Rates with the Mortgage Calculator. So, asset utilization, definitely one of those mind blowers where you can actually get somebody approved by using their assets as income. Now, what exactly do we mean by using their assets? Well, we're not talking about single family homes. We're not talking about artwork. We're not talking about fancy cars. We're talking about liquid assets such as checking accounts, savings accounts, stocks, bonds, or anything that can be liquidated. Now, obviously, the formula is going to be a little bit different when you're using stocks or mutual funds than when you are using checking accounts and savings accounts, or money markets, which are extremely liquid. So there is going to be an adjustment to the amount of the asset. But the main thing to note is that asset will then be will be plugged into the formula to come up with their monthly income. And the best thing about this asset utilization loan, because this type of product in a way, was available, for example, with your big trading houses. You had, $5 million in an account at your stockbroker, and they would let you borrow against those assets, but you have to pledge those assets, right? You actually have to give those assets as the collateral, and then they'll give you the money. In this case, you're putting the property as a collateral, and your assets are yours. You don't have to put them in any type of segregated account where you can't touch them. And if you touch them, there's some type of a margin call. This is not the case. This is the best of both worlds. So there's a lot of borrowers out there that have plenty of money in a 401k, for example. I've run into them where they got $2-3 million. They've been working their whole life. They put away their nest egg. Another perfect example of an older borrower about to retire or maybe semi-retired and making very little money from their actual work income, but they have $2 million in a 401k. Well, you can actually combine their moderate income plus the asset utilization income to come up with their total monthly income and be in a very good position. So it's sort of a mind blower that you can qualify them on something that they're not going to have to pledge, and very good rates, as you're going to see by now. This option is not dependent on your, any employment type or anything like that. So the only consideration is it primary or is it investment? That's really what's going to affect your loan to value and your rate. Now, obviously, it's a little bit riskier than, for example, a bank statement loan where you're seeing monthly income or monthly deposits into the account, but you're going to see very good options. And we can take it up to 90% LTV, which is the maximum on all non-QM loans when it's a primary residence. And additional bonus is that non-QM loans are never subject to mortgage insurance when the loan to value increases above 80.0%. So let me share my examples I have with you today. So first one here is our primary, and let me make this a little bit bigger for you all. Okay, this is a primary purchase, 90%, 1-unit property, and you're going to really love these rates. You're looking at 9.75 is your lowest cost option, costing 1.25 points. And you can buy that down to 8.75% at 2.375 points. Now, I will state, like I like to state in most of these presentations, that we are showing the lowest rate option based on compliance test, taking into consideration that the seller is not paying any of the borrower's closing costs. Because if you do have a contract where there is a seller credit to the borrower's closing costs, then you can apply that credit directly to the loan discount fee, and then that will not be included in the test, and then you can buy it down even lower. We do have lower options in this. So 8.75, lowest rate option, excuse me. So now that was at 90%. So I always like to put this in context and show options at a little bit lower LTV. 90% is the maximum for this product for primary, but at 80%, which is more the traditional LTV for this product, look at the rate improvement. You're looking at 8.49% at par. That dropped considerably. So, when you're looking at cost benefit analysis, you have to provide these options to the borrower if they have the money, obviously, to get there, so that they can consider, because you're looking at, 8.49 wasn't even an option here. And it's still 2.375 at 8.75. So 8.49 is probably going to cost you like 3 points or something like that. So you're looking at a 3% swing in cost, more or less, to get an amazing rate. So that is something that may excite the borrower. So always offer them multiple options and be the amazing consultant we all love to be. So 8.49 is par. It's our lowest cost option. 7.875 is costing 1.25, and there's probably a couple of additional options there that we can pick to go even lower and still be in compliance, probably somewhere in the low sevens. So on our primary cash out, now this is where asset utilization does differ a little bit from bank statement loans, and profit and loss loans is going to be in the max LTV. P&L, I think, is 80% as well, but bank statement definitely on the primary is 85% LTV. On a cash out, asset utilization is max 80%, and that again is going to depend on the appetite of the secondary market for this loan type, right? We don't set the guidelines. Secondary market sets the guidelines to what they want to buy. So they love the bank statement loans. Hence, bank statement loans have a higher maximum LTV on a cash out. So here at 80%, we're still some amazing rates for this cash out. 9.125 is at par, and our lowest rate option 7.875 for a loan where you're just providing your investment account statements to qualify for income. So now we have investment options. So maximum LTV on an asset utilization investment loan is 85%. So at 85% on our investment property, 9.75% is our lowest cost option. And in this amazingly deep rate sheet, we can go all the way to 7.875% on an asset utilization purchase. How you like them apples? That's amazing. So that was at our max, right? So now, again, putting a little context into what I just showed you, this is at 80%, which is the more traditional LTV for a very non traditional product. 8.625% is our lowest cost option, almost at par, costing only 0.125 points. And you can buy that down if you choose to, all the way to 7.25%, costing 3.5 points. And our last option is our asset utilization investment property cash out refi. Again, 80% is still the maximum LTV, even though it's investment. So we got the same maximum LTV and a cash out, whether it's primary or investment property, which is very interesting to note. So 9.99% is almost at par, costing 0.125 points. And again, in an amazingly deep rate sheet, you can buy that down all the way to 8.499, costing 3.375 points for your investment property asset utilization cash out at 80% LTV.
Awesome. So, Jose, basically, you're saying even without any income, if somebody has a large amount of money in the bank, they can get this loan without pledging that money, without showing any income. They're simply using the fact that they have this cash or stocks or whatever the liquid asset may be.
Absolutely. This is another no job needed loan. They assume if you got 3 million bucks stashed away, you're good for it. We're just you just got to plug it into the formula. Now there isn't one universal formula, right? Every conduit is gonna have their own twist to the equation. So you would just have to note that because that's going to be another part of the consultative process that we're going to have. We're going to see what the assets amount are. We're going to look at the different formulas out there to see which is the one that works best to achieve the objective. Once we analyze the ones that work, then obviously we're going to look at the rates of the ones that work and pick the best rate for the borrower to help meet their objective. So again, it's not just about the rate in the asset utilization program. It is about how they calculate the income, right? They're going to go, and also about what percentage of the asset they let you use, what type of seasoning they may require on the assets. So there is a lot of variation in the industry regarding these calculations, something you really have to be very well aware of. So, before we get all happy, jumping and running with the lowest rate option of all the options, make sure that the asset structure fits and meets the objective so that the customer can close.
Yeah, absolutely amazing. Another one of those amazing non-QM products. I don't see any questions. We do have another episode of this on the same topic from earlier this year. And we do also have a training for loan officers on this topic. That's a more in-depth training for loan officers and how to do these type of loans. So you can check out our YouTube channel for the asset utilization loan officer training as well. Thank you for tuning in, everybody. Remember, we do this 11 a.m. Eastern every weekday where we go through the live rates and then do a deep dive into a different topic. So we'll be back next week with some new topics. We appreciate everybody tuning in. Thank you, Nick. Thank you, Jose. We'll see everybody on Monday, 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone. Have a great weekend.
Thanks, everybody.
Have a great weekend, everybody.